Over the last week, pretty much every cryptocurrency has fallen. Bitcoin has fallen from a peak of $64,000 to a trough of $30,000. Ether has fallen from a peak of $4,300 to a trough of $1,800. And Binance Coin has fallen from $675 to a trough of $280. This trend is seen across every major cryptocurrency in the world, and it's all happened over the course of 1 week. I'm Max, this is Stoic Finance, and today we're talking about the impending crypto winter. To start off, we're just going to have a quick recap of what's happened over the last year, so that we can have a look at what's happened over the last week with the correct lens. A year ago, one Bitcoin was worth about $8,000, but the boom cycle that followed 2020 led to an 800% increase in the value of Bitcoin. Ether saw a 2100% increase, and BNB a 3800% increase. Now, Bitcoin's increase was due to a lot of different reasons that we're going to cover shortly, but the altcoins like Ether, BNB and Cardano have always traced Bitcoin's market cycle, and their meteoric rises are largely directly due to Bitcoin's rise. So why has Bitcoin soared recently? Well, in May of 2020, Bitcoin halved, which basically means that the rewards that Bitcoin miners receive when they successfully mine a block decreased by 50%. So far, in crypto's albeit limited history, when Bitcoin halves, it reduces supply, which pushes the price upwards and leads to a boom in all crypto prices. This was then assisted by an influx of support for Bitcoin by institutional investors. Fidelity, JP Morgan, Bloomberg, BlackRock, and a bunch of other institutions have publicly recognized Bitcoin as digital gold or gold 2.0. Some of them are even recommending to their clients that they invest 1 to 3% of their net worth into crypto. ARK Invest, who's run by the infamous Cathie Wood, has publicly predicted Bitcoin will go to $500,000 per coin. Fears of inflation have been rising due to the government stimulus, and Bitcoin is seen as many as an inflation hedge. But the real game changer came from Elon Musk and Tesla, when he publicly announced that Tesla had purchased $1.5 billion of Bitcoin as a hedge against inflation, but also that Tesla would be accepting payment for their cars in Bitcoin. It's really a little bit of help from all of these different causes that led to Bitcoin hitting 64,000, and other coins hitting their all-time highs as well. But why did it fall? Well, again, it's not just one reason. There are a whole bunch of reasons for the recent drop in crypto. But the real trigger was Elon Musk. Elon announced that he and Tesla were no longer in support of Bitcoin due to the high costs of energy and the cost to the environment inflicted by Bitcoin. This instantly caused Bitcoin to tank and lose over $100 billion in value. Elon was probably the most high-profile supporter of Bitcoin in the world, and his denunciation of Bitcoin caused millions of people to liquidate their positions. Elon has since tried to imply that he has shifted his support to Dogecoin, no doubt trying to continue his pump of his favourite meme currency, but ever since Musk's pitiful appearance on Saturday Night Live, Dogecoin has been in trouble as well. As if to purposely pile on the pressure on crypto, China's Communist Party then announced new restrictions surrounding Bitcoin, reiterating that mining and holding Bitcoin is illegal and that those who ignore those rules will be punished. The sentiment behind crypto has appeared to change overnight, with retail investors feel burned by their loss of investments, and institutional investors fearing they may have gone all in on Bitcoin too soon. So the price has continued to fall, leading to 50% drops in some cases. This has led a lot of people to start thinking about crypto winter and whether or not this is it. For those of you who haven't heard of it, crypto winter is the supposed bust cycles that follow the boom cycles in crypto, but in particular, Bitcoin. It is usually expected to follow the rapid growth seen after Bitcoin halves, and so far it has appeared like clockwork every 4 or so years. Now, some people think that because the trigger for this flash crash has been Elon Musk, Tesla and the Chinese government, that this can't be the scheduled winter period. But in my opinion, it doesn't really matter what the trigger for the crash is. What matters is its severity and how long it lasts. Personally, I'm of the opinion that this probably is the start of this cycle's winter, and I would not be surprised if crypto prices continue to fall another 20, 30, maybe even 50%. Now, while I think this correction is going to continue, there are plenty of people out there who don't, so I feel like I should explain their point of views and let you decide for yourself. So the first point is that the biggest difference between 2021 and 2017 or the 2013 crashes is that there is now institutional support for Bitcoin. Banks who have bought Bitcoin as long-term hedges against inflation are not likely to liquidate their positions as they don't make emotional decisions like retail investors do. The holdings of positions by ARK Invest, for example, should provide support to Bitcoin and prevent its collapse from being as severe as in the past. There's also a theory going around about a so-called super cycle, where a boom in cryptocurrency asset prices is not followed by a bust period, but instead growth in these markets just continues on forever. Now, I want to be perfectly clear here. It is very unlikely that this is the case. Never before in human history has a super cycle occurred in any asset class ever. And the main reason for this is because boom and bust cycles go hand in hand. A recession or a market collapse is almost always a response to an overheating economy that is growing at an unsustainable rate. The chances that cryptocurrencies somehow evade this natural phenomenon are close to zero, and I want to make it clear that I do not support this view at all. So it should be clear by now that I don't think this drop is over, and I think it is likely to continue on for some time, but I do want to clarify just a few things. I am of the opinion that Bitcoin's fall will be less severe than previously. In 2013, Bitcoin fell 78% from its peak to its trough about a year later. In 2017, Bitcoin fell 82% from its peak to its trough, again about a year later. I think Bitcoin's price will be supported to some extent by institutions like ARK Invest, and that will prevent it from falling 80% in value like it has in the past. I still think that Bitcoin will continue to slowly fall over the coming months, but its absolute trough will probably be somewhere around 35, 40 or 40% of its peak value, not 20. I also think there will be bear traps along the way, as short periods of growth occur and people rush back in only to get burnt a few days later. I think that's what's happening right now. Altcoins, on the other hand, don't benefit from the same institutional support as Bitcoin, and so I think their falls are going to be far more severe and will range from 60 or 70% to even 95% losses in the worst cases. Finally, I want to be perfectly clear here that I'm not instructing anyone to buy or sell anything. I'm just trying to give you my perspective on what I think is going to happen. If you guys like this video, I might make a subsequent one detailing my plan to capitalize on this crypto winter period, so let me know in the comments down below if that's something you'd like to see. I also realised that I've been making a lot of videos on crypto recently, and I want to clarify that I'm not going to pivot this channel into a purely crypto channel. My focus is still on finance and investments in general. It's just that there's a lot going on in the crypto space right now, so there are some really good video topics for me to capitalise on. Thanks for watching, until next time.